Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining us at the market site in Times Square, New York City, Caleb Silver's back with us. He's the editor-in-chief over Investopedia. We're going to take a look at, S&P 500 up over 350% in the last decade, but a lot of investors have missed the boat. It's great to have you with us as always, Caleb. That's a big number to miss in terms of return. It's
absolutely a big number, and there's no other path to compounding your wealth than the stock market at that types of levels. And we've had low interest rates for the past 10, 11 years coming out of the financial crisis. That was the tailwind for stocks. A lot of investors or potential investors missed the boat because they're just not in the market, or they may be in the market through their retirement plan, but not invested, strategically invested to capitalize on that growth.
All right, let's take a look at our first chart here, and this is stocks held by household. Really a low number.
Yeah, so this is Deutsche Bank's chart, and I've seen this every year for the past several years, and it always blows my mind. 10% of the U.S. population owning 84% of all stocks held by households. That doesn't mean that only 10% own stocks. About half the country owns stocks in one shape or another, but in terms of the concentration of stock ownership, it's in the top 10%, which mirrors income inequality. We know that the top 1% of the country controls about 85% of the wealth. We're seeing it here in the stock market, too.
Yeah, it's a hot topic over at Davos as well. Our next chart, moving along to money market funds.
So we talked about the returns in 2019, the S&P 500 up 30%. That's one of the all-time best years in the market. But as that was happening, individual investors were pulling money out of the market. They were running for cover either in savings accounts or, as we see here in the Fed's chart of money market funds. Look at that last bit of that chart. That is the last year, 2019, rushing into money market funds where the yields are less than 10%, not even beating inflation. So while stocks were going up, individual investors were running into cash.
All right, let's take a look at our last chart here. Now, this is millennials. They know they need to be investing, but there's a number of reasons why they are not investing, and which is so interesting because you would think that being a younger generation, they have the time, they're more aggressive, they have the ability to, up the market, ride the market up and down, that They would be involved.
They have time as a tailwind. They have the ease of use. Getting on online investing platforms is easier than ever. I don't think we have the chart, but it comes from our Millennial Investing Survey, which shows that the things that keep investors from participating in the market or investing is fear. They think it's too risky, and they think it's too complicated, which all comes back to why we think financial education, financial literacy, understanding what investing is all about is core for anybody at any age, but especially if you're young, to take advantage of this compounding returns that actually produce wealth over time.
All right, Caleb, as always, thanks so much for joining us at MarketSite. And thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.